So welcome guys. A lot of people said I should do a sell trade. I should do a sell trade on gold. That is if the strategy I dropped my last video, which happens to be the last video, that if what I drop works on gold. So I want to do that same strategy on gold, and I want to see, and I want to do a sell trade. The other one was a buy setup. So I want to be talking about the sell setup, how you can apply it. Our entry has to be on 1 minute. This is because gold is very, very volatile. So whatever you are doing with gold, you have to, your safety is very, very important, because I've been trading this pair. Gold and G40 is the pair I do trade. So you have to make sure that your safety is very important. And whatever you are trading, you have to make sure that your risk to reward is very, very important. I'm not the trader who preach 1:3 risk to reward. I don't preach that kind of stuff, because you may come to this market, you have several losses. So first, let me give it an illustration first before we get to the chart to show the main thing on the main chart. So this very candle happens to present 1 day candle. This candle happens to present 1 day candle. Let me say this was yesterday candle. So as this market, as this candle is, here was the highest high this market has gone to yesterday, and here was the lowest low he has gone to yesterday. So we mark the low and we also mark the high. We also mark the high. So for you to trade this pattern, you can risk just 2% of your account. You can only risk 2%, which is to say you are risking 2, 10, 20. You are risking $2 to target 2 times 10 is $20, which is to say you are risking $2. You can make $20, and if you lose $2. Or if you are risking $5, which happens to be your 2%, then you know that if that happens to go 1:10 will give you $50. But if you go 1:15, you know that you are going to make approximate at least that kind $70. That is if your 2% of your account is would be up to $5. But this is not really the main fact. It depends on your risk appetite. If you have to risk 5%, that is for you. But as for me to be at the safer side, so that I can still see capital to keep doing this for the next 10 years to come, I'll choose to trade with just 2% of my account. So here was the highest high and here was the lowest low. So as this market opened today, we are expecting something like this to happen. As the market opened, we are expecting something like this to happen. So this is the first thing we are going to be looking at, something like this. So let me explain this very diagram right here. So we are expecting something like this to happen, which is to say, as this market open, it comes into, because this high now happens to be our LQ, which is where liquidity lies. This doesn't happen all the time, but at least you can see this twice in a month. Yeah, twice in a month or 3 times in a month, or it depends on the market and it depends on your entry criteria, because you can be trying to enter a trade on a second and the market will stop at 3 minutes candle and reverse against you. So this is not predictable. This is not predictable. It's just what the market gives you is what you take. So what happened here is the LQ, and the market come back and grab the LQ here, which happens to be our draw of liquidity, which is happen to be our liquidity. So once the market comes to the high and clear all the liquidity, which is to say it went above this high. If the market happens to go above this high, if this day was yesterday and today the market happens to go above this high, we are going to wait for a shift in market structure, which happens right here. A shift in market structure. This can happen on our daily candle. On our daily chart, we have to move down to a smaller time frame for us to look for a shift in market structure. Upon the shift of this market structure, then we wait for our order block. We wait for our order block around this level. our other block will be around this level. So once the market comes to a retest, when the market comes in, it retested this zone right here. That is where we are going to look for our other block or a confirmation candle around this spot for us to take the market down to the downside. So this is what we are going to be looking at. So don't fail to subscribe to this channel. Turn on notification bell for more tutorial videos like this to come. So let us get to the main chart right now. I'm on my gold chart. So we see this candle right here. Like I said, every candle here represents 1 day candle. So this candle, that was the high of the candle, and this very leg here was the low of this very candle right here. That was the low. So as you can see, we are focusing on the high of this candle, the high here, because the high was the untouched liquidity. So the high was not grabbed yet. So we are focusing on this high of this candle. So as this day open right here, as this day open on this very candle here, this very candle, it grabbed the high of that very candle. Let's zoom out. Let's see. It grabbed the high. Let me turn it. Okay, see, that is it. It grabbed the high of that candle. So as it grabbed the high, for us to take a trade on this candle, we have to take our trade and we are to target the previous day low, which is this very one. For this market to for this tutorial to complete, we are to target the previous low, previous day low of this candle. So now it for us to, after we marked the high of the candle and the market was able to liquidate this very high, now it for us to move to our M5 to look for an entry. The entry we are going to be looking at, I've explained everything earlier. So we are going to our M5 to look for a break of structure. So our TP will be this low or Asia range low, which serves as another liquidity zone. So whenever we are taking our trade, we are targeting any liquidity level on the chart, and the one I like targeting is the Asia range low or the previous day low. So these are the two things we are targeting. So let us go to our M5 to look for an entry. As we all can see, here was the line that I marked. I'm on my M5 now. Here is the line that I marked on my daily candle. So let us scale this line to the left. Let's extend the line. Okay, so let's go. Like I said, once the market comes and close above this very line, once the market comes and close above this previous day line that I marked, it for us to look for our break of structure, a shift in market structure in a smaller time frame like our M5, and we take our trade to the downside. But we are going to use London section. If it is not London section, we are not going to take this trade. So now it's for us to plug in our London sections indicator. Let me show you guys how you can make use of this very indicator for those who don't know how to use the sessions indicator. So let us go to add our indicator. The indicator right here, it's already on my chart, but let me do it with you guys. So I will go to indicator. I'll go to indicator. So I'll type on indicator. Let me type. I'll type on indicator. Then I'll click. I will type sessions. I'll type sessions. Once I type sessions, this is what will come up. This is what will come up. Then I'm going to go with the one that is written sessions by Lux Algo. See, sessions bracket locks algo. So that is what I'm going to be going with. So once it come up like this, I'll click on it. When immediately I click on it, this sessions indicator will be on my chart. The reason why I'm not clicking on it right now, it's because this indicator is already on my chart. So let us go to my chart. Let me show you how you can set up this indicator. So for the sake of this tutorial, I'm going to set up only this London section. With time, I'm going to do a video on how you can implement, how you can set up the London, Asia, and New York section. So, but for the sake of this tutorial, let us set it up together. So now I'll click on the sessions. I'll click on the indicator. I'll click on setting. So once I click on setting, this interface will open. I'm going to disable all. I'm going to disable New York. I'm not going to disable Sydney, but I'm going to disable New York. I'm not going to disable Sydney, which happens to be Asia range indicator. So I'm not going to disable it. So all I'm going to be making use of is London section. So this London section now, this is my setting. This setting now, let me click on it. You click on this setting. This is time. The time will come up. It's for you to check the time which bank are working in your country. This is the time you will use for it. The time which bank have started working in your country. The time which people do go to work in your country. So type that time. So the country I'm in is Nigeria, and our bank starts working from 8 a.m. in the morning. So I'm going to set up my indicator from 7 a.m. But once it is 8 a.m., I have to be on the chart for me to look for opportunity in the market. So that is why you see me wrote 7 a.m. right here. So from 7 a.m. to 11 a.m., I'm done on the market for the day. I'm going to focus on other stuff. So this is it for here. So for you, any country you are, set it according to the time which bank are working in your country and the closing time, which is supposed to be 1 hour ahead of the closing time. So you do that. This will help this way. So that is it. So in my country, which is Nigeria, I'm going to set 7 a.m. to 11 a.m. That's supposed to be 11 a.m. but this is 10:45. This 10:45 is the kill zone, meaning between this 10 to 10 between 10:45 I'm going to look for my entry. But once it elapses, once it above 11 o'clock, I'm done. I'm not going to take any setup if I'm not seeing any setup on this market. So this is how you set up your London indicator using Lux Algo. Then after everything, you click on OK. So once you click on OK, you come back to your chart. The indicator is already on your chart. As you can see, it is written London. So you are taking trade during London. So this setup, this very setup can also work on your New York section. It depends on you. You are just checking here. If you are those who go to work and come back in the afternoon, you can still make use of the London section. Then you set it up. That will be from 1 p.m. to 5 p.m. So you set it up, the London section. So you set it up. So that is it for this tutorial. So after that, I'm to turn this to a line chart for me to see what the market is doing. So I will turn it to a line chart right here for me to see if there is a break of structure. Oh yes, there is a break of structure, a big build up on this market. There is a big build up, which is a liquidity inside my London section. This is the build up, and after this heavy build up, we see a liquidity graph to the upside, which is this very one. We've seen a liquidity graph to the upside. They have taken all the people that was gathering here to the upside. Thereby they break structure, they bring the market back to the downside. So for them to bring the market back to the downside, this is where we are going to look for our entry and take our trade. The reason why this happened like this is a lot of people would think that the market is going to go to the upside, that it has breaking structure to the upside. You know, if you are using 1 minute to trade, you are using 5 seconds to trade, you are using 5 minutes to trade, any time frame you are using to trade, there must be a liquidity on this time frame. So as this market take out all this build up right here to the upside, a lot of people, those who scalp on a smaller time frame, may think that this market is going to the upside, that is buying. Then they'll begin to buy the market around this level. Upon this market coming back to this level, they'll be buying it, expecting it to go up. But what happened? The market kick out all the people that was gathering on this zone, all the stop losses, it take it out to the downside. So you that is trading this strategy, this is the time for you to come into the market and place your trade. As a boss, you look for your 5 minutes OB around this zone. So now that you've seen what you are looking for, it is time for you now to turn your chart to a candle. I'm sorry if I'm rushing the tutorial. I don't just want the video to be too long. So you turn your chart to a candle. Once you turn your chart to a candle, what you should do is for you to mark the last bullish candle that lead to break of structure, the last bullish candle that lead to liquidate all these wicks around here, that lead to liquidate all these wicks around here, is what you are going to mark out. You mark the structure, which is this very you mark your OB, sorry, which is this very candle. This candle here, this green candle, is the one responsible for everything, you know. So you mark it out. You mark it out. So once you mark it out, now once you mark this candle out, which happens to be your 5 minute OB, let us write it. Note, you are not going to be trading every day 5 minute OB. 5 minute OB. You are not going to be trading every day, but once you see a trade, take it. If it is a loss, allow it to go. It wasn't yours. Wait for another day. So we have 5 minute OB right there. So now that you've gotten your 5 minute OB, it's for you now to move to your 1 minute. You move to your 1 minute chart for you to take this trade. You move to 1 minute. When you move to 1 minute, you have to look for the last bullish candle inside this zone. The last bullish candle inside this zone for you to take your trade to the downside. So let me move to another day. Let's move to another day. On my last day, I'll show you how you can do that yourself. I'll show you how we can do that together. So let's go to another day. Now we just moved to our daily time frame again for us to select our candle. Please guys, subscribe to this channel so that this video can go to a lot of people, because right here we have a lot to do. So there is something I forgot to also tell you. Okay, let's go back. Not that you can't do it, but let's go back. Let's go back to the 5 minutes. Like I always emphasize, for you to take the trade on 1 minute, but that doesn't mean you cannot take it on 5 minutes if you want. But it depends on your risk appetite. And you know, the gold itself is very volatile. So you are going to look for something that will give you at least 1:15, 1:60, or 1:40 RR, or 1:30 RR is what you are going to be looking at whenever you are trading gold, because a lot of times the liquidity will take you out several times. But when you cash one trade, make sure you cash one trade. So this is your 5 minutes. You can place the trade right here. This is your 5 minutes. Your stop loss will come a bit this zone. If the market comes to that zone, then it's taking you out. If it doesn't come, then it's good. So you place your stop loss few pips around that zone, and you know the least pip on gold is 3 pips. So your stop loss in your trade will be on this very candle, which is your engulfing the last bullish candle, the last bullish candle before the break in market structure to the upside. So you can still take your trade right there. You target 1 to 10, 1 to 15 using your M5. But if you are using your 1 minute, you should be going 1 to 30, 1 to 40 or so. So we've gotten our 1 to 15. 1 to 15 was right there. But if not, this is where we're supposed to target the we've already, this is the zone. That is our Sydney, the Sydney low, which happens to be Asia low. So this should be your first target there, which is your 1 to 12. Then you can pull back to 1 to 15 if you are the type who take 1:15. So that is your 1:15, and you target your TP. If not, this is where you're supposed to target the previous day low, which is right. The previous day low will be around, that will be around here. Yeah, that will be around there. Previous day low, you target here. That is where you're supposed to target, which will give you about 1, which will give you about 1:31. But your first TP will be this zone here, will be this below this Sydney section, which is the Asia. That will be your first TP, which is 1 to 12. In previous day low will give you 1:30 RR. But if you are taking this trade on your 1 minute chart, this very one trade will be able to give you 1:30, 40, 50 and above. I'm not a fan of 1:3. I keep saying it because you're going to encounter many losses as well. So let us go to another day and see what we can see. So right now I'm done with this very candle. I'm done with this one. So this day is what we are focusing on now. This day is what we are focusing on. So this day, here was the low of this day. That is the low, and we have this very candle right here, which happens to be the low, because it occurs inside this one. It is the one longer than, is the lowest of this one. So this will be our target, where we are going to target. So let's place our high. Let us scale our high. Our high will be a high of this very previous day candle, which is right here. So that one will be our high. So the high of this candle is what we are waiting for the candle to grab. Once the market comes back and grab this high, that is where we are going to look for our entry, for us to take our trade to the downside. So let us go to our 5 minutes to look for an entry. Guys, please don't forget to subscribe, like and comment, share if you learned something from this tutorial, please. Guys, as you can see, this very line is the line I marked on the daily candle. That is the line that I marked on the daily candle. So here is the line that I put on dividing the previous day in this very day candle. So here was the division. So this side is the previous day candle, and why this line is this day candle. So let's all check if the market was able to close above that high. Yes, the market was able to close above that high. Upon closing above that high, did it break structure to the downside on our 5 minutes? Let us plug in our London indicator, which is our Lux Algo indicator. So now our London indicator is being enabled. So inside this London is where we are going to be looking for our break of market structure to the downside, because we are trying to take a sell trade because the market is breaking structure to the upside. So now let us turn this to a line chart. So we've turned it to a line chart and we've seen that this market was able to break structure to the downside, which is right here. It's breaking this structure to the downside. Let us check if true it broke structure to the downside. Okay, this is where the wick is. That is where the wick is. No break of structure to the downside. It was just a liquidity grab right here. It was just a liquidity grab. It didn't break and close below that wick. So the wick, the market didn't close below those wicks. It didn't close below those wicks. It was just wicking. So it wasn't a break of structure. Consider that, take that into consideration. So let us keep going. Okay, we have a high here. We have a high right here. This candle happens to be a high. Let us scale it to the left. Yes. So upon this market coming to this point, we see a closed. We've seen a closed above this wick. We've seen a close above this wick right here. So we take that into consideration as our break of market structure. So that is to say that this leg here, we have a high right there. We have this low right here. Then we have a high that close above this line that I marked. It closed with that candle and it retraces back again and grab liquidity to the downside, but it did not close below it. It go back again and tested that zone with a wick, and it's come back and break structure to the downside. Let's check if it's broken structure to the downside. Yes, it broke structure to the downside. So this is what happened on this zone. So now that we've gotten a break of market structure on this zone, now that is when we are going to our 1 minute. We have a break of market structure on this zone using this very candle. So this is when we are going to go to our 1 minute chart and look for the last bullish candle that lead to break of this structure on our M5. So we have to mark out our M5 zone before we go to our 1 minute. So this here is the bullish candle that lead to break of that structure. We scale it to the upside. Now is for us to go to our 1 minute and mark the last bullish candle, which happens to be our order block, our 1 minute order block right here. This zone now is our 5 minute OB. This zone here is our 5 minute OB. So let us go to our 1 minute and look for our 1 minute OB. Let's go together. Just for you to make sure that you take only one trade. If it is a loss, that is a loss. If it is a win, that is a win. One trade a day. If it's a loss, it's a loss. It's a win. If it's a win, it's a win, because you are going to be, at times you may encounter many losses. So, and you should focus on only one pair, because you can, if you take loss here and take loss here, your emotions towards the trading, as in your emotions will be okay. Your emotions toward the chart will not be okay. So focus on one pair. Then if you lose 1, 2 or 3% of your account, that is, if you are risking 2 or 3% of your account, then you know that this is what you are going to lose for today. Once you lose that, you are okay for the day. So just look for one pair and keep on doing what you know how to do best. So right here we are on our M5 OB. So inside this our M5 OB, we are going to look for our 1 minute OB. So let us mark the last bullish candle that lead to a break of structure to the downside, which is this very one here. Is this very one here? Yes, it's that very one here. That is 1 minute OB inside 5 minute OB. 1 minute OB inside 5 minute OB. So that is the candle right there. So that is where you are going to place your trade. We have two ways to place this trade. It's either you place your trade right here on this candle. You place your trade right there, your stop loss come above this zone, and you target previous day low will be your target. You target previous day low. You target previous day low, which is here. That will be the previous day low. Okay, that is the liquidity. That your first TP will be the Asia range liquidity, which will gives you 1:30. And upon you targeting the previous day low, which is right here, this very the last green candle, that will give you 1:50. But there is another way you can trade this. This is upon this market coming into your 1 minute zone. Upon this market coming into this your 1 minute zone, let me remove the 5 minute OB. Let me remove the 5 minute zone. So let's deal with only this one. So this is upon this market coming into this zone, you pick your fib. Since this is a sell scenario, you pick your fib. You fib from the up. You fib from the up where the candle was to the end of this 1 minute candle. So once you do that, pay attention. You focus on the 0.78. Your focus will be on 0.78. Yes, here will be your focus. 0.786 fib retracement level. Here will be your focus. And your another focus will be on this 6.8. Yes, 0.618 fib retracement level will be your second entry. Anything around below or around this 0.5 fib retracement level, you are not going to do anything with this. So for you to take your trade on the 0.786 retracement level, you pick your short 2. You place your trade right there. Your stop loss come a bit above this zone. We target the previous day low. Even though you are opportune to take just a trade in a month, you are okay to go. Your first entry will be the liquidity grab. I've mistakenly deleted the sections indicator, which is supposed to be a liquidity grab. Let me add it up. Sessions, logs argo. So like I said, our first entry setting So our first entry will be our Asia low, which is this one right there, which has already given us, that has already given us 151, 151, 1:151 RR on just one trade. Then for you to target previous day low, which is this second green candle, the second green candle right there will gives you 1:200. That will give you 1:245 RR. This is the magic of you trading using gold. Only one trade can change everything around. You just have to stick with this. Don't trade. If you see setup, you trade it. If you don't see setup, you rest. Come to the markets, implement it. If you take losses, loss is part of the game. You take your loss, you go. But whenever you are trading gold, if you are to risk 2%, it's okay. At the end of the day, you know what your 2% is. If you are having $100 account, and you know quite all right, if you are having $100 account, you are risking 2%. 2 times 10 is 20, and 2 times 100 is 100. Yes, 2 times 10 is 20, and 2 times 100 is, I think, if I'm not mistaken, that will be 100 or 200. Why 2 times 200? You know what you stand getting. That is you using Fibonacci to trade. So if your capital is $1,000 and you are risking 2%, check out how much you gain. So guys, if this strategy, you've learned something from it, and you see how you can build that your small capital, don't fail to subscribe. Turn on the notification bell for this tutorial to go viral, for other forex traders to learn something from it. Peace. I remain Aqua FX.